right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Tuesday, yes, the 20th of January 2026. Look, it's a very exciting day so far here in Europe. The US market is going to be opening in about not full 7 minutes as I'm recording this video, but I'm going to jump into the charts. We're going to see the opening, but basically Europe is selling off hard. The bond yields are just flying high. Japanese bond yields are just crazy. Honestly, everything is surrounding geopolitics. There's a big thing happening in Davos as every year. Tomorrow we're planning to see, we're expecting to see the U.S. president speaking at Davos. Honestly, everything is all over the place. There are threats thrown out here and there. But you know what we need to do first, as always? We need to have a quick read through our risk disclaimer. Yep, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Well, I mean, there's nowhere to hide, to be honest, from the current situation in the world. Look, also just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, there's no even point of jumping into like the economic calendar because I think it seems like no data is current. No data matters right now. Everything is surrounding tweets or posts and who said what, who said where, who's threatening who, and that's what's happening right now. Looking at DAX here, look at this major decline here. So on Monday, we opened with a gap to the downside. Today, we opened with a huge gap to the downside, and it seems like we're going to be seeing some runaway gaps going further. Look, again, at least that's the kind of current fear because if you kind of somehow missed everything what's happening in the world, because look, there apart from issues in Gaza, issues in Venezuela, issues in Iran, we continue to have issues with Greenland, and this is probably it could be the trigger point in a way of markets not loving not loving everything. But look, I mean, we heard that the U.S. leader is really strong on actually obtaining Greenland. Either buying it or by force, apparently, which actually, yeah, is just extraordinary. It's really, really extraordinary. And the most important is really extraordinary to see the response from the European Union, because again, we're seeing kind of some sort of unity in there. I don't know if it's going to be more of a show or not, but at least the show. At least we're seeing some sort of unity against against the U.S. Now, look, it's like I said, it's a very interesting moment that we're going through. At some point, somewhere, there should be a bluff. The markets are selling off on based on these news. We saw another post from the U.S. leader basically attacking the French president, saying that if he's not going to support the Gaza deal, and he's going to put the U.S. leader is going to put 200% on his wine and champagne, which is imported into the U.S. Honestly, it's really becoming difficult to kind of to follow all these threats. Who's getting 10%, who's getting 25, who's getting 200%. It's everything's all over the place. And I think that the market is kind of having enough already. And looking at this picture here, you can see that the German DAX it is drifting lower after a good run to the upside last week. We're kind of finally seeing a reversal back down, and this is what I kept on saying in my Markets Talk webinars and my other webinars, that look, whatever comes up must come down, right? Apart from gold and silver for now. Look, the indices had a great run. There we go. DAX made around what 25,500. It hit that level. Congratulations who were shorting it from here. I talked about this as well. I said to you, look, my Fibonacci extension, this is what helped me to determine that little target. Why? Because if I draw it from the lowest point of November to the high of the 12th of December to the low of the 18th of December, then you'll see that the 100% here on the Fibonacci extension kind of sits around the 25,455 zone. So basically around that area where we created a new all-time high. From here, we're declining, and look at the beautiful test. I mean, honestly, that's why I love Fibonacci levels. I mean, Fibonacci retracements and extensions, because look at this. This is just spectacular. We drifted all the way back down here. We drifted all the way towards that 38.2 on the Fibonacci extension. Now, if I would draw a Fibonacci retracement, I'm wondering if there's going to be some sort of a nice, beautiful coincidence here. There we go. Honestly, beautiful. Where's that? There we go. 61.8 on the Fibonacci retracement right here. This is what I'm looking at here. The 24,500 kind of 30-ish zone. A little bit lower than that, but anyway, it's never the exact level. It's always the area around that level. But look at this beautiful thing. Boom. We tested that. 61.8 on the Fibonacci retracement. So now we're seeing a little bit of a retracement back up. Now look, okay. If you go through all the news channels and different news outlets, everybody now starts to compare it to April of 2025. What did we have in April 2025? Exactly. Boom, big massive drop here because the big board with tariffs was next to the leader's head and the U.S. leader's head, and basically that the market didn't really like that. It was a panic moment and everybody was selling. Now, there are, like I said, there are expectations that maybe this is the same thing, but look, again, we'll have to take it very carefully. I think that when we had this crash in April, it was very quick, very rapid. Now what's happening is we're seeing strong declines, but those are kind of like not on on the same speed as we had in April. So maybe you could take that April drop as a flash crash, perfect opportunity to jump in, and there we go, we rallied again. But this time, I don't know, something smells different a little bit because there is a little bit more fear in the market, I think, because again, everybody's also worried about Japan. I'm going to just show you what's happening with the Jap. If the U.S. bond yields are just flying high here, are surpassing surpassing that 4.30 territory. Japanese 10-year, look at this beautiful shot up here to the upside. Japanese 20, oh my god, this is a very parabolic move, and this is what's raising fears. And basically this is where also fears about the BOJ increasing their rates could end the whole carry trade. And if you're not aware of that, basically the whole carry trade is when Japanese borrowers used to borrow cheaply in Japan and then put that money somewhere abroad. Mostly it was in the West somewhere. Mostly it was the U.S. U.S. Treasury bonds, and basically buying a lot of U.S. debt. And now why I need to go and invest there if back home domestically I can put my money to use. Again, of course there's a lot of moments here that we can debate, certainly, but look, for now this is what the market is kind of fearful about, and also the fact that what's going to happen with the Federal Reserve, because we know that the White House administration did kind of push the Department of Justice towards the subpoena of Jerome Powell. I mean, look, it's everything. All the conventional kind of models seem to be kind of falling apart right now. So look, I think that this is where the moment I really like to look at my technicals, and for example, looking at the Dow Jones Industrial Average. Look at this. I talked about this in my Markets Talk webinar. I said to you, look, we are already open 2.5 minutes, and we're seeing a move lower. However, let's not rush into things, okay? We do have some strong areas of support. If the whole Greenland thing kind of calms down a little bit, maybe the Powell thing also calms down, we could see a beautiful reversal back up. I think that this is, it's very difficult to say it right now that okay, now this is the point from where we start selling, and we're going into a crash. I think that there's more, should be more to it. If, like I said, we will continue monitoring, but if we suddenly start seeing rapid drops, then yeah, of course, this is like becoming something worrying, and we know that right now, as much as they're talking about how they want to see lower rates in the U.S., I think that they need to be very careful because inflation might pick up because the whole tariff thing eventually could blow up, and it could, everybody will stop passing on. Sorry, everybody will all the retailers, for example, will slowly start passing on everything what all their inconvenience over collected over the year, because of the tariffs. So this is, like I said, this is where rational expectations kind of kick in. When keep on saying that it takes roughly a year for everybody to realize that there's a problem. So the problem kicked off in April. We're almost a year. And like I said, this is where we are actually fearful of higher inflation. So at the moment, we're seeing lower numbers for sure, but keep your eyes on Thursday. If I'm not mistaken, yes, Thursday. Yes, the PCE, the Fed's beloved PCE numbers. Those are going to be for October and November. But still, there is a little bit of an expectation for maybe seeing slightly higher numbers. But again, don't want to over speculate on this one because the data is a mess, because the Bureau of Labor and Statistics, U.S. Bureau of Labor and Statistics, is a little bit in a messy place. Still, I think it will take them longer time to recover, but certainly we're going to keep an eye on those numbers. However, I do believe that we need maybe to jump into to get January's numbers, or maybe to get like February's numbers to see actually what's happening, and that will take us February, March. So until we get some sort of like clarity in the data, or better quality data. Anyway, long story short, so what I'm seeing here right now, we're seeing a hold up from on the technical side. We're seeing a hold up on the Dow Jones Industrial Average near this upside support line. Okay, look, if we do drop and stay below it, then yeah, of course I'm going to go lower. But if we somehow push back up and we somehow climb back above the 49,000 mark, I think that there is a possibility for actually a move back up, maybe even going and hitting an all-time high again. So let's see what's going to happen there. The S&P 500 holding on nicely here, holding on this 50-day EMA shown as the green line. It is yes, it is pointing lower, but to be honest, I talked about it in my morning session on Monday. I talked about it on Friday. I said, look, we have this little short-term upside line, which kind of is providing some sort of support. If that gets broken, I will lean towards the downside, but I'll aim for the 6,827 territory, somewhere around here. And there we go. Boom. Fantastic reach. Of course, we reached the 50-day EMA, which is just fractionally above that hurdle, but nevertheless, I'll take that as a success because it's never the exact level. It's always the area around that level. And now the question is, can we see a further decline? Well, look, I'm not going to, like I said, I'm not going to rush. I want to see what's going to happen today. If we're going to stall somewhere around here, then of course the question, what's going to happen tomorrow in Davos? What kind of a speech we will get from the U.S. leader. So we'll see what's going to happen there. Nasdaq also is seen lower. It dropped below this highlighted zone of mine. I talked about it. So in a way, I'm targeting now the 24,822, or maybe even the 100-day EMA shown as the blue line here. And that's roughly around the 24,800 and kind of 10, something like that area. So let's see what's going to happen. But if somehow it climbs back above the 25,222 territory right here, I might actually start considering the upside again. So yeah, I just wanted to give you a quick little update. The FTSE, for example, you can see here, Europe, like I said, it is selling off, but be very careful. DAX is probably feeling the heat the most. For now, I mean, we know that Germany is in the center of the whole kind of conflict between the U.S. and EU over Greenland. So yes, I mean we'll see how that plays out. Some investors, you can see that they're abandoning the U.S. dollar today, really falling hard. Although safe havens should be gaining, and they are. Like we'll if we take a quick glance at gold, for example, yeah, new all-time high. Silver, similar story, all-time high, but this one is actually forming some sort of a doji here. Let's see if that's going to be a possible reversal signal. However, I said this in my recent video that actually I'm kind of hoping to see 100 level on silver. Like, might as well hit that. But yeah, we'll see how it plays out. But yeah, like I said, very interesting developments right now. It's a moving market. It's there are things happening. We're, like I said, seeing the economic forum in Davos happening right now, and yeah, there it's a big stage where a lot of things are getting said and told. So be careful. Let's see what's going to happen. Like I said, let's see how tomorrow's day going to go. But certainly, let's not panic yet. But certainly keep our eyes on potential further declines. Ladies and gentlemen, thank you very much for watching and listening. I hope you found it useful. As always, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. And I shall see you in my next little video update. Bye for now.